please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. We're counting down to pre-open. Should be a flat start because yesterday we had a big decline, and this morning there's been a bit of a recovery that we have seen. Also, the market's very close to the 20-day moving average, somewhere around 10,700 is what we have as far as that moving average is concerned. Ms. Tulsian, okay, before I take final thoughts from Ms. Tulsian, let me just go across to Manisha Gupta as well for a quick roundup of all the commodity market action. Manisha, good morning.
Morning, Anuj, and thank you so much for that. Well, there is some buying and recovery in commodity space as well in the global markets. The crude oil prices have seen some buying come in. That's because the API is reporting a 3 million barrels of a decline in the U.S. inventories in the previous week. That has been supportive. But as we have been talking, the major cues, of course, would come in from the OPEC meeting in Vienna, where there is a lack of consensus among the OPEC members, and that makes it for an interesting conversation. And the events and the statements out of it will give you direction here. The important point is that you also have seen some buying come back in case of the metal space. Most of the metals are not too far away from their recent multi-month lows that they hit, but we have seen some buying come in on Shanghai and on LME as well. The reason for that is that you have seen a strong manufacturing and exports data come out of Europe, and that has been supportive. But even then, the copper prices have lost nearly 8% in the last 2 weeks. Nickel is down 6% in a fortnight as well. And a couple of metals which actually have turned negative for this year is iron ore, which is down 9% for this year, and zinc is down 8% till date as well. So not a very rosy picture, but we are definitely better off from where we were trading yesterday.
All right, Manisha, thanks a lot for joining us. And Mr. Tulsian, thanks for stopping by and speaking with us as well. For now, we have to concentrate on the pre-opening rates that are hitting the screen. And remember, it's not been a good going for our markets, but it's been the case across the globe. So let's see how it shapes up. Lawrence Belanco of CLSA joins in to track all of this action for us. Lawrence, hi, good morning. The last time we spoke with you, you had indicated that the overall trend for the Nifty is still on the upside. Things have gone a bit awry over the last week or so. Do you get a sense that perhaps this uptrend or this theory of an uptrend will now be put to rest?
Well, it's still intact. You mentioned, or your colleague mentioned the 20-day moving average. We're still above that. You're still above 50-day. You're still above 200-day. So if you're looking at simple trend definitions, Nifty's still in the uptrend. And to me, the 50-day moving average around the 10,659 area for Nifty is key. And as long as that remains intact, your immediate bias is to the upside. It's probably worth bearing in mind if you look at the Indian market in dollar terms relative to the broader emerging market index, you've actually broken the downtrend of underperformance since the 2016 highs. So while the rest of emerging markets sell off in relative terms, India's holding in there quite well.
Okay, Lawrence, hi, good morning. I was looking at the 50-day moving average, 10,650, and also the last closing low on the Nifty was 10,590. You reckon if this range is broken for whatever reason, in that case, would the texture of the market completely reverse?
Well, it doesn't completely reverse. The big breakdown area where I think you can get outright bearish on the Nifty is essentially the lows that you made in April and December 2017 and April 2018, which sits sort of just below the 10,000 level. And as long as that's intact, you can call the Nifty in a broader trading range, and it really have to break below that 10,000 area to turn the outlook for the Nifty to an outright bearish one. That wouldn't be my base case, though.
Lawrence, good morning. You earlier also had given a target of about 31,000 on the bank Nifty. Are you retaining that as well?
Yes. And yes. And again, I mean, if you look at Nifty banks, the uptrend is still there. We're still above the 50-day. And yeah, we have seen some hesitation at 27,000, which is just below the January highs. But even with this recent volatility, we haven't violated any of the short-term support areas or the longer-term support areas.
Okay. What about the other markets, Lawrence? Because there's an increasing view now that a lot of money will be moving out of many emerging markets and into China. How is the Chinese market looking to you relative to other emerging markets?
Yeah, so essentially you can break China down into sort of three indices that capture different parts of the Chinese economy. So if you've got the MSCI China, which is essentially heavily weighted towards the China Internet names, which are US listed. Then you have the Hong Kong listed HSCI and HSI. Now those markets did break down yesterday with the Shanghai Composite, so it does look like the domestic China market is in store for further weakness. But if you take the MSCI China Index, which includes the China Internet ADRs, that's still holding within a range and still holds above its 200-day moving average. So you've got at least some relative outperformance from the MSCI China. But on the domestic side, it does look like we're set for further weakness there.
Lawrence, if you're talking about the Nifty uptrend being intact, then within sectors, how are you looking at things? It's been a phenomenal, for instance, month for pharma. Does it look like some of these pharma stocks in India are making a durable bottom?
Yes, well, if you just take the Nifty Pharma Index, absolutely. It's been a sector that's underperformed for over 3 years, and we started to see signs of this basing out earlier this year where momentum was slowing to the downside. If you look at the index that retested those lows two months ago, you formed this double bottom pattern, so you've got a clear base in place now, and I do think the sector can continue to re-rate.
Okay. Lawrence, what about this comparison between developed markets and emerging markets? Your thoughts on whether we are in for sustained outperformance of developed markets?
Yeah, so I think the key thing that we've seen of late is obviously dollar strength, and that's been negative on the emerging market side. What it has done is put the emerging market chart relative to the developed market chart back into the basing pattern that we saw develop between 2016 and 17. So we haven't seen an outright resumption of the downtrend of the 2010 highs, but we've seen a move back into the trading range that we saw between 2016 and 17. And this does suggest that we're likely to see a retest of the lows of that trading range, but it's only when we break below those lows would the DM trend of outperformance continue. Again, we think that from the longer term trends is unlikely, but in the short term, EM underperformance looks like that continues.
Okay, so the EM underperformance would continue. What about the rupee, Lawrence? You have written notes on, the way the weakness in the rupee is shaped up. Where do you see that going? And in that context, how do you sort of trade on the technology, the pharmaceutical stocks?
Yeah, so I mean, the key thing that we had highlighted on the rupee was the trading range that you formed between 2017-18 when we broke above 65.5 rupee. That gave us an upside target of 68, which we've essentially met. And if you look at our momentum indicators, momentum on the upside is now slowing. So our base case in the rupee here is that we've probably seen the worst. 68, 69 will be the top end of the range, and we'd look at support coming through at the 66.50. So I think the worst rupee weakness is behind us, and I'd look for the rupee starting to stabilize between 66.5 and 68.
Okay, that would certainly be...
patterns with preferred pharma.
Sorry, we were just losing the audio connection, but we have you back, Lawrence. Please carry on.
Oh, yeah, so just on the sector side, the pharmaceutical sector would be the preferred play on the setup there over the technology side, which had a great run-up at the start of this year.
Okay. Lawrence, a word on commodities. If you have tracked them of late, crude has been very volatile. You've seen a bit of a downplay of late in metals.
Yeah, so it is a mixed bag depending which commodity you look at. But we start off with oil being a big sort of impact on the Indian market. Is that what we'd been flagging on the oil or Brent setup was that momentum to the upside was slowing. We now have a short-term top in place that's formed below the $80 resistance area. And the setup is for oil to correct back to the 200-day moving average, which sits around $66. And our base case is for a trading range then to form between 66 and 88 and 80 dollars gain ahead, but immediate downside back to the 200-day at 66.
So you did mention at the start of the chat that the Nifty uptrend will remain intact as long as the 50-day moving average of 10,650 holds. What is the corresponding level for the Bank Nifty?
So it's very similar. If we look at the 50-day for the NSE banks, you're sitting at 25,930, call it.
Okay, so So you expect the Bank Nifty to hold around these levels? I mean, it is sitting above 26,000 at the moment. How does the chart look for the rest of the year?
Again, we still have that 31,000 ultimate upside targets, and we'd be looking at that 50-day holding, the short-term pullbacks, and the trend remaining to the upside.
Lawrence, I don't know if you've had the chance to look at any of the individual Nifty components of late. Sort of some of the stocks that have helped us through this route is something like a Reliance Industries. I don't know if you have a view on that, if you could share some insights. And within the banks, there's been some sluggishness around an HDFC Bank, which is otherwise such a huge stock for the Indian market. Since you're positive overall on the uptrend, which are perhaps the constituents of the Nifty that look the strongest to you?
Yeah, I don't have those charts in front of me, so I can't comment on the individual stocks. I've only got sector views that I can comment on currently.
Yeah, but within sectors, fair enough. So we've spoken about pharma. Any other sectoral trend that emerges which might keep India on track with the higher side targets that you have on the Nifty?
Yeah, sure. So as we've said before, the key driver to our 12,000 upside target for Nifty remains the banks index, and obviously we've talked about the pharma side where we see the base forming that. We've touched on technology before, but I think a lot of the technology run is now behind us, and would prefer that pharmaceutical side.
Right, Lawrence, we'll leave it there. Thanks a lot for your time today, this morning. That's a slightly bullish Lawrence Belenko on the technicals. The pre-open has settled. The Nifty is up 24 points in pre-open. The Bank Nifty is up 54 points. So interesting. Just keep an eye on a couple of these names. Idea Cellular is starting 2% higher, but it's been a weak stock. Kaveri Seeds of late has been strong, 1% higher on that. Tata Global, on the other hand, is down about 1%, and Interglobe is a bit soft. So, Darshan, your thoughts on the pre-open? Is there a trade?
No, there is no trade, but it's interesting because 10,700 may not even be breached today. So to that extent, we just wait and watch. I don't think we want to go long today.
Okay, don't want to go long today. I guess that makes sense, right? Given the kind of global cues that we have, it's sort of been all over the place for us as well. The last few days have not looked good. But Prakash Gaba, wanted your quick thoughts on some of these stocks that have been big losers this month. A lot of the metal names, whether it's Vedanta, some of the commodities, Coal India, ONGC, all under pressure. Any fresh shorting candidates from this pocket?
Yes, Vedanta, Jindal Steel, Tata Steel. There I've seen a lot of selling pressure here. Vedanta in particular, it looks like it's closer to support though, but looks like it can reach around 220 zone. That's a very important support zone to work with. If that goes, perhaps we'll see more downside. As far as Jindal Steel is concerned, I think there's support closer to around 200 zones. A good slide to around 200 or maybe 210 is a possibility.
Okay, by the way, tech had chosen to sit out of the market yesterday. We didn't see buying. Today, at least the pre-open suggests that some buyers could be back on Infosys TCS. Mitesh, how are you looking at these two? And also mid-cap IT, I mean, we've seen a correction on the likes of FirstSource and IIT Tech. Any long trades here at all?
I'll avoid that, Surabhi, for the simple reason that, the patterns are now suggesting some consolidation sideways action. So while they've given back a few percentage points in the last few days, they might gain a couple of them again today. But I don't think there's a trend or a stronger up move happening over here. So for the time being, it's off the trading radar for next few days.
All right, how are we positioned on something like an Idea Cellular, Sudarshan? I mean, I know this stock has not been your favorite. I don't think you've liked it for a very long time. But lately, because of the Vodafone merger, etc., it's come back on the radar. Any trades?
No, absolutely not. It's a complete avoid. Do not get trapped into it. Pharma and IT are so much better options.
Pharma and IT are better options. This morning also looks like Cipla will have a good start. Lupin as well. Aurobindo yesterday corrected. That one also is looking a bit interesting. Mitesh, what would be your top conviction call for today? Any interesting stock?
See, I think amongst my recommendations, I think I would be very comfortable shorting at Shree Cement. I think that's broken a very, very critical support level. And that about, I think, Marico on the buying side, I think it's given a good 4 or 5 day kind of pullback, very close to support zone. So the risk-reward equation is very favorable.
Okay, just about a minute to go. Sudarshan, how are you looking at something like Bajaj Finance, some of these financial stocks, even a Group Finance for that matter, some of the housing finance names? Any fresh trades for today?
No, I think they're going to be available for shorting if the Nifty starts cracking down, but not today. But that's the only way to look at them, to wait patiently for them to be sold into.
Okay, well, that is of course the the market texture as well for now. This 24-25 point move, may not generate too much confidence. Will be interesting to see. Prakash, what would force a bear to cover? Especially after the big move that we saw yesterday.
10,750.
Okay.
That's a very strong resistance. It needs to cross. Even if it does cross in the short term, it will get stuck at 8,823. Sorry, 10,823. Very, very stiff resistance. But first resistance, 10,723.
Okay, 10,750 is where...
750, absolutely.
Okay, 10,750, Prakash reckons could be the first area where there could be some short covering, but not too much is what he reckons. IT and pharma should open well. That's the indicator, at least that's the indicator, at least that we got from pre-open.